I've chosen Dubai for its outdoor activities. It's a luxurious lifestyle. There's so much to do out here.
It's secure, it's safe, it's a great schooling system.
We wanted something with lots of green open spaces where our children can go out and play.
دبي أفضل فرص لأي شخص من أي جنسية.
The beaches are really nice. The infrastructure out here is next level.
Dubai offers tremendous potential for real estate, and you can be sure that you can get a good return on investment. I would say currently it's a good market to buy a property.
It's a great place for a family, and it's a great place to invest overall.
أنا سعيد جدا لامتلاك منزل في دبي، ومتأكد أن دبي المكان الأفضل للاستثمار.
It's definitely the place to be.
دبي بيت الثاني.
Greetings, Excellencies, distinguished guests, ladies and gentlemen. My name is Karen Pizon and I'll be your MC for today. I welcome you all to the 6th edition of Invest in Dubai webinar series, a platform focusing on real estate investments where we will discuss all the various reasons that Dubai is the investor's chosen destination. Invest in Dubai Real Estate is a joint partnership between the Dubai Land Department and the International Property Show, a global platform which bestows a gateway allowing growth for investors, business owners, financial service providers, government sectors, real estate, and many others, bridging the gap between those seeking growth in their businesses for long-term rewards and reaping the potential benefits. Invest in Dubai Real Estate is all set to unveil unprecedented interactive features on 11th to 20th November 2020 as it launches its very first digital edition. Through virtual reality, event participants will have a unique immersive experience as they explore the city's world-class infrastructure, cultural hotspot, business hubs, and other remarkable features that will further highlight its great reputation as a preferred investment destination. In partnership with the International Property Show, the 10-day digital event will gather leading exhibitors, developers, investors, and professionals from different parts of the world via events10x.com to showcase interactive activities such as virtual exhibition, training sessions, webinars, project presentations, investment destination, project tours, and office tours, offering a one-of-a-kind interactive experience for the global real estate community. And for more, visit www.idubai.ae and follow our social media accounts for more updates, and looking forward to see you all in its very first digital edition. So the topic for today's webinar is developing resilient housing finance markets. The session will provide support to customers in understanding and implementing fintech innovations in housing finance product development, delivery, legal and regulatory frameworks of the Dubai housing finance market. Just a few housekeeping notes before we get started. If you experience any issues with your audio or video during the webinar, just refresh your browser and that should take care of everything. And if you have any questions during the presentation, please do feel free to post your questions on the chat box, as we will have a Q&A round with our speaker at the end of the presentation. Today, we are joined by Mr. Awais Akhtar Butt. He is the co-founder and CEO of Etis Dubai, and Mr. Awais, banker and finance expert with over 17 years of experience working in financial institutions, including Saudi Pet Bank, Union National Bank, and Amlak Finance PJSC. Mr. Awais, the stage is yours. Mr. Awais, you can unmute, please. Yes, that's it. Thank you.
Can everyone see the presentation that I've got?
Can't really, no. So we can recheck or ask for the guidance. the team, please.
I'm trying to start sharing it, but it doesn't give the screen that we want to play.
Would you prefer the team to do the presentation, okay, right?
I think if they can put it up, I think it would be good so that we can proceed with the presentation right away.
All right, okay, we'll do that. We'll check. Yes, you can see the screen?
I can.
Yes, all right.
Sir, you can go ahead.
All right. Thank you very much, Karen, and for the introduction. Hello, everyone, and good afternoon. As Karen explained that I happen to be the co-founder and CEO of Ethis Dubai Private Limited. We are into crowdfunding for real estate under construction projects in Dubai. So in order to start with what crowdfunding basically is, crowdfunding is all about digitization. Crowdfunding is all about fintech, and not only fintech and digitization. It talks about financial inclusion. When we say financial inclusion, it means that all the segments of the society, all the target market groups, which has not been included in the normal, conventional, or the other non-banking financial institutions model, they are all covered under crowdfunding model. It's basically an emerging fintech model that unites the borrowing side and the lending side, the people who need the funds and the people who want to invest the funds, without excluding everyone out of the equation, because people as low as, let's say, at times in certain crowdfunding platform models, they can invest as low as $200, $300. So it basically fills the gaps which are there in the economies. It competes as well as it complements the existing financial structure which is there in the market, be it a bank or a non-banking financial institution, be it a borrower's needs or the lender's needs. It covers all. So this is what the crowdfunding opportunity or the crowdfunding model is all about. So coming to the next point, now, there are two different types of crowdfunding. One is peer-to-peer financing and the other is equity crowdfunding. So the main differentiation between the two is, one is a pretty much borrowing and a lending model, which is peer-to-peer financing, or we call it loan-based crowdfunding model or finance-based crowdfunding model. This model, it's merely a debt which is being created on the borrower side. Investors are investing into a project or into a scheme or into any kind of an equity partnership where they invest the money against a predetermined profit rate or a rate of return with a known tenor. And then once everything is completed or the project or the purpose for which the investment was made is fulfilled or completed, the money comes back to the investors together with the agreed profit rate. However, in the equity crowdfunding model, the investor becomes an owner in the entire proposition or in the business model or in the project. So they invest the money, they get the shares against it. So those shares remain with the investor unless or until they want to offload them. So that's what the differentiation between equity and peer-to-peer crowdfunding model is. So there are certain different Further tweaking is done between the two models. There are different regulatory regimes across the world which deal with equity crowdfunding and peer-to-peer crowdfunding. But mainly when we talk about the two different main categories of crowdfunding, one is the equity-based crowdfunding and the other is loan-based crowdfunding. Now coming to the next slide. As we say, when we talk about a crowdfunding, or we talk about, let's say, when this word crowd comes into our mind, or some people sometimes probably perceive that when we talk about crowdfunding, we are talking about very limited kind of scales or very limited kind of volumes. However, contrary to what most of us believe, the crowdfunding all across the globe has been a known phenomena now, and it has already established its footprint. It's already established its course, and it has already made its way into the mainstream financial sector. If we see this graph or if we see this chart, we can see some of the leading countries where the crowdfunding is already existing or has been existing for quite some years. They are talking about in billions. If we talk about only the volumes in China and US, it's $200 billion, exceeding $200 billion alone. Then there is UK there, then Indonesia is also upcoming. One of Ethis Crowds or Ethis Dubai's partnership or venture is in Ethis Indonesia as well. Australia also happens to be investing $9 billion. So the scales and the volumes when we see in the crowdfunding also, some of the countries we can see that the volumes are enormous. So the potential is enormous, the opportunity is enormous in the crowdfunding market. Now, Ethis Group. In order to give a little brief on the Ethis Group has been operating for the last 5 to 6 years in different jurisdictions and different markets. We have got as Ethis Group licenses in different regimes or different regulatory environments, be it Singapore, Malaysia, Indonesia, and now we have ventured into Dubai, where we are, or UAE rather, where we are focusing on real estate under construction projects in Dubai. So we are leading somehow this ecosystem of crowdfunding, and where we are also part of different fintech alliances which have been operating throughout the globe. So as an Ethis, as a group, we have already proven our trademark in Malaysia. In Indonesia, we have worked very close in public-private partnership even, where we are building so many houses for the social sector, where we call them social sector housing or low-cost housing. And in Malaysia also, we have just recently started our equity platform, where Ethis will be not only doing business into loan-based crowdfunding model, whereas equity-based crowdfunding model as well. Some of the recognitions, the core values of Ethis, it's people sometimes the question would come into the mind, what is Ethis all about? What is this name Ethis? So it's ethical plus Islamic if we talk about in a short form. However, if we go by the individual abbreviation of the name, then it's excellence, transparency, honesty, integrity, and sincerity. So this is what Ethis is all about. So it's a Sharia-based, very transparently regulated and very transparently structured and operated platform, which means excellence, transparency, honesty, integrity, and sincerity. Ethis has been, since we've been successfully operating our model in different jurisdictions and different parts of the world, we were awarded in 2016 Islamic Economy Award in Dubai. Also 2 years back, we were selected under Expo's Innovation Live Grant, where we were awarded a cash reward. Plus, we were also one of those companies who potentially are going to be showcased in Expo 2021, which is going to be next year, inshallah. So these are some of the awards and accolades. And also at the same time, we were also awarded by World's Islamic FinTech Alliance. Ethis was also nominated and had won that award. Recently, last year, Ethis was selected under RIO initiative of Dubai Land Department, Real Estate Investment Opportunities Initiative. In July last year, we were selected, and we've already been awarded twice by Dubai Land Departments in order to come up with this innovative fintech-based digital crowdfunding platform idea, where our target market is to enable real estate under construction market of Dubai to raise funds, have easy access to the funding requirements in order to complete their projects, and at the same time, the investors who've been looking to invest in Dubai in order to provide them that opportunity and platform so that they can come and invest as low as $5,000 and can return returns probably as good as what the property developers probably earn. So these are a few of the signing ceremony pictures that we've got. The next is going to be that I'm just going to touch on what Ethis Dubai does. So if you go to the next slide, yeah. So that's our global crowd investors base. We have got around 28,000 investors currently, or crowdfunders we call them, from 65 different countries of the world. So if we see here, predominantly there are 2-3 countries which are holding majority of the investors. However, if we talk about overall scenario, you can see that pretty much we have got footprint and traction all across the globe. So 98%, the interesting thing or the fact that we had noticed that 98% of the investors who had participated or invested on our platforms were the first time investors, meaning that those people who could not get the opportunity to invest in the past, by ethics being there or by a crowdfunding platform being there, they could invest in, they could capitalize upon that opportunity and they can utilize that platform and they could have invested in our platform. So value of the projects that we have funded so far is approximately 45 million US dollars. Now coming to Ethos Dubai, we are a Singapore formed company. Our company is incorporated in the Republic of Singapore. Our platform is based and is being operated out of Singapore. And our target market is Dubai's real estate market, where our focus is under construction projects. We are operating here under the supervision, or I would say under the patronage of Dubai Land Department, and where we are provided a regulatory framework in order to operate and finance projects in the Emirate of Dubai. So we are including all categories of investors. So one hand, we have got borrowing side, which are the developers, because we are targeting under construction real estate projects in Dubai. So the real estate developers who are building under construction projects in any part of Dubai, we work with them in order to raise funding. Of course, we've got certain empanelment criteria. If that is fulfilled, then we provide funding for them. With regards to the investors, as I had mentioned in my introductory note, that we are covering and including all segments and all categories of investors. First is the retail investors. Those are the investors who can invest up to $5,000. These are the investors who are typically or potentially the first time investors, the investors who have not invested into real estate or any of the, I would say, investment instruments before, be it a real estate based instrument or any other instrument. These are the people who could not go and invest money in the conventional funds which operate in the market. Or probably these are the people who do not have the capacity to buy. If they want to participate or have a share of the real estate market, they do not have sufficient funds to go and get a full unit, So they can invest as low as $2,000, $3,000, $1,000, up to $5,000. This is a cap which is there so that the entire savings of, let's say, one person or one household is not committed towards one investment or something. Then the second category of investors is the professional investors. These are the investors which can invest higher amounts. They can invest amounts exceeding $5,000. These are the investors who have got sense about the investments. They have got a track record of how the investments are made. They have already done it in the past. So these category of investors, we call them professional investors or sophisticated investors. Then the third category that we also include in our crowdfunding model is the institutional investors or market counterparties. So as the name suggests, that there could be any, hedge fund, private equity company. This could be any investment bank for that matter, who can invest in our platform. They can also invest any amount of their choice. So there is no cap. So retail investors, there is a maximum cap of $5,000. Whereas the other two categories of investors, professional investors and institutional investors, there is no cap on their investment. They can invest any amount of their choice using our platform. Then the funding that we do and raise is fully securitized on the last slide part. Project empanelment criteria. This is a high level project empanelment criteria that if we have to onboard a real estate project to raise funding for the same, how do we do that? So it's basically, we check the reputation track record of the developer. I and my partner being there in the same industry, which is real estate finance industry, it helps us because we've got knowledge of the market. We know the people who operate. So we use our, as they say, the tacit knowledge in order to get that information, as well as we require all the documentation. We've got standard checklist. We need the documents in order to vet that information about the track record, reputation, what are the other projects which were done, be it here in Dubai or anywhere else. Then the most important part is that we need to get clearance from Dubai Land Department as well as RERA on the developers' licensing issues, on the past record, on the history of the project, not only the developer, but the project itself. If the project is going okay, the construction progress has been fine over the years or over the last few months, and how's been the overall, the status of the project. So this is where Land Department and RERA also guides us. They help us, and they also monitor or provide us that guidance that whether we should onboard a project or a developer or not. Then the security coverage, which is very, very important. We need to have 150% security coverage for the funding that is being raised. So if I have to give an example of this, if we have to raise 1 million dirhams, we need security coverage or the units, unencumbered, unsold units with a value, market value, evaluated by a third party evaluator being 1.5 million, which is 150% of 1 million. So this is very, very important part. Then the cash flow analysis is there of the project as well as the developer. Then there is a custody account requirement. This is also a very important tool for us to ensure that the funds which are raised, they are kept safe, secure, they are deployed for the purpose that they were raised, which is the construction of the project. And there, once the project is completed, the funds can come back safely and can be remitted back to the respective investors who have invested in the project. So there is a custody account that we keep it with one custodian bank. The bank has to be here in UAE, a normal service licensed by the UAE Central Bank. So there is a custody account which is in place. All the funds which flow in, any investor who is investing money in the project goes into a custody account, which works as per a mandate. The mandate is clear that the money will be only disbursed tranche-wise, and it will only be disbursed against the rail construction progress certified by a third-party engineer to the projects. And that too, the money from custody account will go to a escrow account of the project. Because in Dubai, there is something which is called as that all projects have to have a RERA governed escrow account. So the money flows from custody account to escrow account. Then there is a satisfactory valuation and feasibility report that we need to have it in place. Once all these checks are met, only then we can onboard a developer, and then we go out to raise funds from the investors using our platform. So if we have to put it in a process cycle, that how the process cycle works in a sequential manner, it's first of all, we do the appraisal and empanelment of the project. Once all those checks are met, the project is empaneled, and then we go for collateralization and securitization, that we ensure that 100% security is there. The units are in place. We vet them, we evaluate them, we approach Dubai Land Department, and then we secure them as a collateral. Then we start going to public to raise funds. We call it a campaign period, where we market or advertise the project or the specific campaign, that this is what the funding requirement is, and this is what the rate of return being offered for this period of time. Then we do the marketing. Once the funds are received from the investors, they go into a custody account. As previously explained, custody account is kept with a bank here in UAE, UAE Central Bank licensed bank. The payments are released from the custody account to the project's escrow account. Once the project is completed, the money comes back into the custody account from the escrow account. The money comes back either through the sale of the units which we held as a collateral, or the units which are already sold in the same projects, the receivables of those units, because typically the payment plan is that once the unit is sold, the majority of the payment comes upon handover. So once the project is completed, the handover takes place, the payment comes back, and that's how our investors are paid by the developer. Then once the funds are received into the custody account, our custodian bank remits the money back to the investor together with the agreed profit rate. So whatever profit rate was agreed at the time when the transaction was booked, or at the time when the funding was raised, the same profit is applied pro rata on the investment amount, respective investment amount of each investor, and then the funds are remitted back to them with the profit. Now, the crowdfunding main benefits, it has got benefit for all stakeholders. The main stakeholders being is the country in which we operate. Now, currently, Aethys Dubai is targeting the real estate projects in Dubai. So the benefits are the showcase of the entire real estate market to the global audience, because as I highlighted in one of the slides, that we have got investors from 65 different countries, and that keeps on growing. That traction keeps on growing, because as and when we progress, there are more countries are added to it. So it's an excellent opportunity for the real estate market to be exposed to investors, and to investors who are not earlier exposed, because currently we've got, let's say, people or an offer or proposition to sell units to the investors all across the globe. But not everyone probably can secure 300,000 or 200,000 dirhams in order to buy a studio or a small unit. However, with crowdfunding being there, that limit is now reduced to $1,000, $2,000. So anyone who has got even a saving of $1,000 or $2,000, they can invest that money in the real estate and then can get very lucrative returns. And everything will be securitized. It will be securitized by the Dubai Land Department. It will be the money will be kept in a custody account. So this provides an opportunity to reach out to the pockets or reach out to the cycles where currently the limit or the reach is very limited. It adds to, and then there is a complete transparency because everything, as I said, is digitized. Everything is fintech based. The money comes back. The money is parked in a custody account. Again, there is a complete transparency there since the entire activity is done under the patronage of the Dubai Land Department, which is a government regulator. So everything is supervised and monitored under the same mechanism. Then there is a control mechanism there, as I said, that the funds do not go directly from the custody account to any vendor or probably any third party. The funds flow from custody account to another escrow account. That escrow account is again governed by a real estate regulatory agency of Dubai. So there is transparency, there are control mechanisms, there are safety nets, and at the same time, the proposition is very lucrative because the investment amount limit is very, very minimal. It's hardly there. And since it's all digitized, the reach for every investor is very, very simple. All they need to do, they need to go to the website, create an account, register themselves, and then they can start exploring the real estate investment options. So any investment option that they like, they will be the ones selecting the amount, and they will be the ones who will be selecting the project and simply remitting the funds. And from there, their relationship will start. So they don't have to, let's say, come here or physically visit or probably sign tons of papers physically and then courier them probably. It's all digitized in a very seamless manner. They just go digitally execute the entire transaction, and then periodically they are posted for all the activities which are being done on the project side as well as on the overall industry side. So these are the benefits for the regulators or probably the area where we work in, which is Dubai at this time. Then for the developers now, what are the benefits for the developers? The main benefit being there that there is access to funds, because not all the developers or I would say the real estate projects are able to secure funds through the mainstream banks or non-banking financial institutions. So the funding opportunities are limited, whereas as we see the scale of the real estate, especially the under construction market in Dubai, it's been progressing at a very fast pace. So the funding requirement is huge. However, the supply side for the funding has been always limited. With crowdfunding being there, focusing on the under construction segment, it gives an opportunity to the developers to raise funds through sources. And since it's peer-to-peer, they are the ones who are reaching out, or they are the ones who are somehow showcasing their project directly to those investors. So they don't have to go to unauthorized private investors who will be charging them, exorbitant amount of profit rates or returns. And then that thing is also not regulated under any regulatory mechanism or framework. It's just something that they go and borrow funds at exorbitant prices or exorbitant rate of returns. And at the same time, as I said, there is no regulatory compliance or monitoring mechanism of it. With crowdfunding being there, we give them access to those funding. At the same time, since their project is getting exposed, their developers' projects are getting exposed to those investors, they have the opportunity to cross-sell their units. Because once someone decides to invest in a project and he remains an investor, he or she remains with the journey of the project, once the project gets completed, the developers have got the opportunity to cross-sell the units to the same investors who have been during the process life cycle of the entire project with them. So it gives them that kind of a database and access to those investors, not only to raise funds during the construction phase, but also to sell their units once the project is completed. Then there is publicity of the project also to the global audience, because it goes to our database as well as to any new investors and markets. Because as I said, that we'll be running a massive campaign once any project is onboarded in order to go and raise funds. Then the third category and the most important category also is the investors, because investors are the ones who will be investing money, who are looking for avenues to invest. But I said that either they don't have, let's say, sufficient funds to go and buy a unit, or probably in order to start with, they do not intend to invest the money to buy the full unit. However, they've got certain amount parked or budgeted, which they want to invest in order to start their investment, journey in Dubai's real estate market. With crowdfunding being there and this opportunity of real estate under construction investment being there, the crowdfunders can invest using our platform in these projects. The investment is going to be securitized through the government agency. As I said, the funds are going to be routed all through the banking channels. There is going to be complete flexibility, because at one point in time, the platform will be hosting more than one project. So it will be investors' choice either to invest all their funds in one project, or they can always have the option to split their investments and invest in multiple projects, offering multiple returns, multiple or different tenors, and multiple security offerings. There'll be complete visibility: who is the developer, what is the project structure like, what is the progress like. Periodically they'll be updated, all the investors, that how is the construction progress going on, how is the funds flow and the deployment going on. And then later on, the same investors, as the developers have got the benefit after the completion to sell their inventory to these investors, the investors also get the opportunity that once the project is completed, they can convert their investment into equity and buy a unit in the same project which was funded by them. But that's an optional for both the developer as well as the investor, but this opportunity is there. So these are the benefits for all the stakeholders who we work with, and crowdfunding's overall holistic, the proposition for Dubai's real estate market. With that note, I would like to end the presentation. Thank you very much. So if there are any questions, I'm happy to open the floor.
Thank you, Mr. Oais, for the very insightful presentation. I think we'll go ahead and take some time for the questions. And just a reminder to all our participants, please be sure to type your questions into the chat box, and we will be on the right-hand side of the screen. Mr. Oais, I think you're going to address the unanswered questions right after the webinar, just in case we'll not be able to cover it. We can send it through email, yeah? All right, so let's have a look at the first question. Mr. Oais, first question: what will be the advantages of investing in crowdfunding for real estate?
Well, first of all, the advantage is, I would start with the crowdfunding advantage. The crowdfunding advantage is that they'll be able to invest as low as 10,000 dirhams, which is almost, I'm talking about $2,000 or 1,000, almost $2,000. So this is one of the advantages for crowdfunding. So the lower or the minimum investment amount is too low. This is one of the advantages for crowdfunding. The second advantage is for real estate crowdfunding is, when we talk about under construction projects, the rate of return offering is higher. When we talk about ready property, there are certain limitations, where one can offer only that kind of a return, because there is something which is called as a rental yield. So you need to be confined within the rental yield. However, if a project is under construction, I would say the capacity or the ability for any developer to offer a rate of return is much higher. That's why all the developers so far, since we have recently started our operations in Dubai, we are talking about, they are happy to offer a very high single digit returns. We're talking about 9-10%. If the person who has asked the question, they will see our website, they will go and check on the other jurisdictions that we are working in. Even we are offering as high as 15 to 16% per annum. The projects that we are funding in Malaysia and Indonesia, we are offering 15%, 16%, 14% per annum profit rate. So if someone decides to invest money in real estate using crowdfunding platforms, especially for the under construction projects, they have got the opportunity to invest and get lucrative returns up to 9, 10, 11, 12% per annum. So if the project cycle is 2 years or 1.5 years, automatically that gets added to it. So that's one of the main important opportunities. And since it's real estate, it's asset backed, unlike any other business, for instance, or any other, let's say the project financing and all that, there could be some collateral, but here the main thing is that there is a collateral which is there because it's real estate crowdfunding. It's under construction. There is a regulator on board. There are 2 regulators, Dubai Land Department as well as RERA, because we are operating in Dubai. Secondly, there is a custody account as well as escrow account. So all those checks and balances are in place. All those safety nets are in place when it comes to real estate investment or real estate crowdfunding. So you've got asset-based investment, first of all. Second, very high and lucrative rate of returns. And everything is monitored and controlled by a regulator, which is a real estate regulator. So these are all the opportunities and the benefits for investing into real estate under construction crowdfunding.
That's very clear, and I hope they get that. The next question, for borrowers, what are the advantages of crowdfunding over traditional lending?
Well, you see, as I said during my presentation also, the traditional lending, as we say, or we say that borrowing through banks and non-banking financial institutions, that is very, very limited, because that I'm just not saying out of thin air, because I've got experience in the same industry for several years. When it comes to banks and financial institutions funding under construction real estate projects, there is a very limited appetite which is there. So when I say limited meaning that if we talk about, let's say 10 developers, probably 2 to 3 will be able to secure funding out of those. So the borrowers, first of all, the advantage is that they'll be able to secure funding. If their project is good, the developer is good, their plan of action, or I would say the feasibility of the project is good, they'll be able to secure funding, number one. Now, what will it get them? The funding or the access to funding or easy funding at a good nominal rate would enable the developers to complete their project. So they would not have to stall the projects. They would not have to delay the projects, because delay or stalling the project means that the investors who have already bought in the project, the buyers of the project, there are legal complications. They become unhappy. By us being there, we'll be able to raise funds. With those funds, the developers have got the option to complete the project in time, deliver it to the buyers who are already there. And once they've got the finished product in hand, it is easier to sell, because we see that year on year, the market keeps becoming very competitive. Under construction market becoming very competitive, especially after COVID. If we see, the selling under construction units has become far more difficult than selling a ready property, because everyone is looking for a ready property. So if the developers decide to, because for the developers, the only, I would say, the avenue or the main source of avenue to raise funding is selling the units, and selling the units off plan during construction and raising the funds. If they do that during construction, they will have to scale down the pricing as low as possible. Plus the payment plans, they will have to give very stretched payment plans. They will have to collect maybe 10-20% during construction and 70-80% post handover payment plans they have to sell it. However, if they do not go for raising funds by selling the units when it's off plan, they can get funding through crowdfunding, through Atheist Dubai, complete the project. Once their project is completed, they've got a finished product in hand. It's far more easier to sell a unit which is ready to move in. So they borrow the money, they complete the project, then they go out in the market and sell once it's ready. Then even the bank finance for the end users or the buyers becomes very, very easy. For the developer to sell something which is already there, ready to move in, is very, very easy. And at the same time, the funding is not a problem. The project progress will not be hampered. It will go as planned. So these are multiple benefits for the borrowers or the real estate developers, I would say.
So let's say when you're talking about easy, let's say when it comes to the time frame of these both, which one is most preferable for you on your side? Like
time frame for what?
Time frame for both, and doing like the traditional and and all of this, the construction, or the first doing the crowdfunding, or just the investors to buy everything already?
Well, you see, that's an option which is for the developer, not for us.
Mm-hmm.
What I'm saying is, because the question was that what are the advantages for the borrower? Borrower in this case is the developer. So what I was suggesting, or what my point of view was, that the best or the biggest benefit for the borrower, which is the real estate developer in this case, is that they do not have to sell their units off plan at very low or minimal prices. For them, the best or the ideal option is that they raise funds, because for any developer to complete a real estate project, they need funding. Their first requirement, or the most important requirement, is have access to funds, sufficient funds to complete the construction. So they have to get funding through the real estate crowdfunding. They can complete the project. Then in a second sequence, they can sell the units. So it's up to the developer. For us, obviously, since we are into crowdfunding business, we are into financing business. For us, definitely the best path is the developer approaches us. We see the project. If the project meets the criteria, we impanel them on our platform and we raise funding for them. So the answer to the question would be that if those developers, they are seriously looking to complete the project, and they think and they believe and they trust their product, and they think once it's ready, it will deliver the good quality or the optimum quality to the investor, then it's the right thing for them to have access to sufficient funds, complete the project, then sell the inventory.
That's perfect. Very good enough. Moving to our next question. I think you already covered this, but what are the main methods of crowdfunding in real estate sector? Main methods.
Yeah, main methods, as I said, there are two broad categories. One is the loan-based crowdfunding. The second is equity-based crowdfunding. Now, the loan-based crowdfunding, the model is very clear. The model is that there is a developer or a borrower who's looking for funding, let's say 5 million, and they are saying that the borrower says that I need 5 million for 1 year. Once 1 year will be completed, I will give you 5 million back along with 10% profit rate or interest rate for that matter. In conventional, we say interest rate. However, since Aethys is Sharia compliant, we call it profit rate. So 5 million plus 10% for 1 year. So any investor who will be investing in this project, they will be getting after 1 year, whatever they invested plus 10%. So there is no other, what do you call it, dependency on, let's say, selling the unit. There is no other dependency on cash flows and all that. So this is loan-based crowdfunding. The second category or method, as you said, is equity-based crowdfunding. In equity-based crowdfunding, a developer would say that I need 5 million. And against this 5 million, I will allocate 10 units or 20 units to the investors. So once those 20 units are allocated to the investors, it's up to the investors how they dispose it off, offload it, they keep it, they earn a yield over it. The developer will be out. So the developer got 5 million and transferred units worth 5 million or 6 million, whatever, 5, 10, 20 units to the investors. And later on, there won't be any settlement or repayment and there won't be any tenor. They can give some indicative timeline on the completion of the project, but it's the onus to repay the money is not on the developer in equity based. It's because it's an equity. They have created a share for the investors in the project. What is that share? Those units that they have allocated to those investors. So that's how it goes. So these are the two methods,
All right.
equity based and loan based.
All right. Okay. So I think we're going to cover 3 more questions for that before we end up. Who can be a real estate crowdfunding investor in Dubai?
Everyone and anyone who wants to invest. As I said, we've got 3 broad categories. If there is a retail investor means anyone who has got no prior knowledge, has never invested into real estate or any other investment instrument for that matter. They can invest any amount up to $5,000. $5,000 meaning around 20,000 dirhams. So they can invest. These are the retail investors. Then there is a second category, which is professional investors or sophisticated investors and market counterparties. These 2 categories can invest any amount of their choice. There is no cap for them. So that's why I said in the beginning, our model covers financial inclusion for the investors. Everyone and anyone can invest. So there is no such limitation that we will do any profiling. We will do any such, due diligence. We do our AML and KYC, definitely, that's for sure, because since it's financial services, so our anti-money laundering and know your customer compliance mechanism is in place. That standard checking is there. Beyond that, there is no profiling that we have done saying that this, for example, investment class or probably this kind of individual we would not really include or something. So anyone or everyone can invest.
Yeah, anyone and everyone, and you are there to guide them. Yeah.
Absolutely. Absolutely.
Yes. I was asked actually to just provide you one last question before we wrap up.
Sure.
In Dubai, which type should invest in? Commercial or residential?
Well, I would say mixed use is the ideal scenario to invest in these days. And mixed use could be commercial, residential, or residential retail. So those are the best ones. However, it all depends upon the project proposition. You can have a commercial project in an ideal location, which will be better than a residential project probably. So that all is covered under the due diligence that we perform. Because you will see a lot of projects in Dubai, which are commercial projects, but they are placed in ideal locations, and they are rented even before they are completed, or they are sold even before they are completed. So I would say there is no hard and fast, or there is no probably yardstick to measure which one is better or which one is not. It will all depend upon the location. It will all depend upon the end product which is going to be there, and it will all depend upon the proposition which the developer is offering. If all those are in place, only then we can cover. However, the safest bet, of course, is always residential, a mixed use project, which is a residential retail project or as a residential commercial project. But again, as I said, I would not like to undermine any commercial project, because if a commercial project is located in an ideal location and is being built by a good developer and having a very excellent proposition of the end product, then a commercial project would be an excellent feasibility as well. And the rate of returns are always higher in the commercial project.
Thank you so much, Mr. Owais. So unfortunately, we're running short of time. And as we mentioned a while ago that Mr. Owais will be reverting all the questions and queries via email. So Mr. Owais, is there anything else you wanted to say? Yes, before we wrap up.
Thank you very much for hosting the meeting, and thank you very much to all at Invest Dubai team.
Great. Thank you very much. And thank you all for your time and a great webinar. Thank you for joining us today, and we appreciate you being here. So to download today's representation, please visit our website, www.iadubai.ae, and we will also be sending an email to get back your feedback on today's webinar with a link to download the presentation. And we're also conducting a short survey to get your feedback on today's webinar, and the link to the survey will be shared via chat and via email. Also, once again, follow us on our social media channels to keep yourself updated. And thank you. Have a great day, Mr. Owais.
Thank you.
For joining us.
Thank you. Bye-bye.
Bye.